The 30-year mortgage rate just hit 6.5%. Car loans are averaging 6.9%. Credit cards are sitting at 22%. And the cost of borrowing money in this country keeps going up with no clear end in sight. This video is not about Wall Street. It is about your mortgage payment, your car loan, and the credit card statement sitting on your kitchen table right now. Let us start with what is actually happening in plain English. No financial jargon required. When you borrow money for a house, a car, or anything else, the interest rate you pay is influenced by what the government pays to borrow money. When the government's borrowing costs go up, your borrowing costs follow. And right now, the government's borrowing costs are going up. A major financial rating agency cut America's credit rating last Friday, the equivalent of your personal credit score dropping. Just like when your credit score drops and you pay more to borrow, the same thing happens to the country. Lenders demand higher interest rates to compensate for the perceived risk. And those higher rates flow through to the mortgage rate you see when you call the bank, the car loan rate the dealer quotes you, and the environment that keeps credit card APRs stubbornly elevated. The 30-year mortgage rate hit 6.5% this morning, according to Fortune, up from 6.38% last week. That is a meaningful move in a short period of time. Here is where this stops being abstract and starts being your actual life. A mortgage rate increase of 0.25% on a $300,000 home loan costs you an extra $45 every single month. Over 30 years, that is $16,000 more as paid to a lender for the same house at the same price, just because of a number that moved in the wrong direction. A rate increase of 0.5% on the same mortgage is $32,000 more over 30 years. On the same house, on the same loan, just at a different rate. For car loans, the average new vehicle APR is already 6.9%. 1 in 5 buyers who financed a vehicle in the first quarter of this year committed to a monthly payment of $1,000 or more. The car payment that was already eating into grocery money is getting more expensive as rates stay elevated. And for credit cards, the average APR is 22.3%. Nearly 30% of Americans are now using their credit cards for day-to-day essentials like groceries and utilities. That 22% interest does not care about mortgage rates or credit agencies. It just keeps compounding on every dollar of balance you carry from month to month. Here is the mistake millions of Americans are making right now. They are waiting for rates to drop before they refinance, waiting for relief before they pay down their credit card, waiting for the Fed to cut before they make any meaningful financial moves. For most of this year, the expectation was cuts in March, then June, then the end of the year. Now some officials are talking about raising rates instead. The relief that was always just around the corner keeps getting pushed further away. Every month you wait for rate relief, your credit card balance keeps compounding at 22%. Your car loan keeps costing you 6.9% on a depreciating asset. The mortgage rate you qualify for when you are ready to buy or refinance is the rate available on that day, not the rate you were hoping for 6 months ago. Waiting for Washington or the Fed to make your financial situation more manageable is not a plan. It is a hope. And right now it is a hope with very uncertain timing. Here is the insight that changes your financial posture regardless of what rates do next. Every dollar you pay toward a credit card charging 22% annual interest saves you 22 cents per year. Permanently. That is a guaranteed 22% return on your money. No market timing required, no rate forecast needed. Arithmetically locked in the moment you make the payment. Compare that to the best savings account available today paying 4 to 5%. Paying down 22% debt beats the best savings rate by 17 percentage points. Now here is the part that most people miss. If rates go up, your guaranteed return from debt payoff goes up with them. A credit card that moves from 22 to 24% means every dollar you pay down now saves you 24 cents per year instead of 22. The worse the rate environment gets, the more powerful debt payoff becomes as a financial strategy. You do not need the Fed's permission to start. You do not need rates to fall before debt payoff makes sense. It makes sense today at 22%. It makes sense tomorrow at 24%. It makes sense regardless of what any rating agency decides. The highest guaranteed return available to any American household right now is paying down high-interest debt. That has been true all year. The rising rate environment makes it more true, not less. Here is the practical action sequence for this week. Open your credit card statements. Find every balance and its APR. If anything is above 15% and the average is 22, that balance is your highest priority financial target. Every extra dollar available after your essential expenses goes toward that balance first. Update your budget with current rates. If your mortgage or car loan was taken out at a lower rate and you are tracking your payments, your numbers are fine. But if you are shopping for a home or a vehicle right now, build your budget around 6.5% mortgage rates and 6.9% car loan rates, not the rates from 18 months ago that you remember. And build your plan around the environment you are in, not the one you are hoping for. The families who come through this period in the best financial shape will be the ones who accepted the current reality, acted within it, and stopped waiting for relief that may arrive much later than expected. Disclaimer: this video is for educational purposes only. Individual results may vary. Please consult a financial professional for advice specific to your situation. The Debt Defense System and the Finance Reset Toolkit are both in the description. Two tools built for exactly this environment: a budget that works when borrowing costs are high, a debt attack plan that generates guaranteed returns regardless of what rates do next, and a complete financial system designed for real life in 2026. Links in the description. Subscribe to my YouTube channel at Pocket Pilot Fina, and subscribe for daily money moves that actually work. Subscribe now, a new money tip every single day.